Hello, today is February 19th, 2022. We always start with our disclaimer, go over our calls, and then make some predictions. This is my trading plan for Tuesday when the market reopens. Remember, I can be completely wrong, and any trade you make should be at your own risk. After Thursday's close, we said there was a chance higher prices would print, but we didn't think the decline was over. We didn't have to get the higher prices, but we did, and certainly the decline was not over. It was a pretty negative day, dropping almost all day, but it's important to notice, despite this big drop, we closed over all the intraday lows, and if maintained at Tuesday's open, if it's maintained, that's a sign of strength and should lead to higher prices even if we don't close higher. Of course, if we gap down, the rule is gap in the undesired direction, calls kill before the open. But that's a sign of strength and should lead to higher prices if it's held at Tuesday's open. We also have some higher targets. Let's go over them. And one lower target. Well, early in the morning, we got a target from the MEJT system of 43.8510. The move down was called false. The F is false. And unless we gap down smartly, that's my target, most likely to print by early Wednesday. Now we have some optional targets. They don't have to print, but they will print 95% of the time, which isn't too bad. If it doesn't print by Tuesday's close, we forget them. One of them is 43.9070. One of them is 43.3094. In addition to this optional target from the afternoon pattern, we also got a signal that higher prices would print. We got much more than the minimum. System doesn't say you have to stop at the minimum, and we didn't. But that doesn't necessarily generate a trade, if that's all you have. It does give one a warning if you're on the short side that higher prices are coming. If that's all you have, I think it's enough to put a stop on a short position. I don't know if I'd personally go long if that's all you had. Well, here's where we are on the daily chart. These numbers are Tom DeMark's TDST lines. They offer support. You can see how well they worked here and here. Support extends to a whole bar under the line, so you can see we're right in an area he identifies as support. Support doesn't have to hold. I think it'll break at some time. But right now we've dropped to a support area, according to his work. Well, this is the wave count we've had since late November of last year. We're counting this as end of wave green B from an ABC structure. We had perfect wave balance at the high. I know there are other counts out there too. As long as they don't break anybody's rules, that's fine by me. But I think this explains what's going on, and the FIBs are great. Now, the last target we had, and we had several possible targets, the last target we had was wave green C equal to green A at 39.0851. And what's important about that is if you take what we call the November high, and you take our most recent target, then Friday's lows within 1 point of a 50% retrace and could have some significance. Now, if this is the high, since we've traded higher, this would have to be an ABC, an expanded flat of some kind. And what you're looking for possible ends of this ABC, if that's what it is to find a place where there's a good fib relationship between C and A. So let's focus in just on this high here. Well, here's what we have at Friday's close. Here was our wave count right at the high, If that's A and that's B, and you set A to 50%, you get C equal to twice A right at the low, and all these internal fibs work too. So you have wave balance at that point. Doesn't mean that's the only number that works, but it's one of the numbers that works. And what's interesting is we have a very significant trend line, and we stopped right at that too. And my rule is either you gap under the trend line or the trend line wins. If we don't gap under this line, I think any move under a Tuesday won't stick. But often when you drop in a straight line to the trend line, you don't go through it. Often that's the end of the leg, which this is a candidate to be. These are my calls for the patterns for next week. Tuesday's pattern has the early low. We could still gap up. There's a higher MEJT target. Unless we gap down smartly, it's favored to print by early Wednesday. There are optional targets, both higher and lower than where we closed. Each is a 95% chance of printing on Tuesday, but if it doesn't happen, we'll just forget them. We're retesting the January lows. Numerous secondary indicators, percentage of stocks with positive patterns, over their 200-day moving average, new highs, new lows, PPO. They're all stronger now than they were then. The market's at the earlier level, but it has more strength. We're in an area Tom DeMark's indicators identify as support. There is wave balance and trendline support at Friday's low. Despite trading down all day, we closed over intraday lows. It's a sign of strength, and it can be vitiated only by gapping and promptly undercutting Friday's lows. If that does not happen, we should trade higher regardless of whether or not we close higher. Friday's low is a candidate for the end of this leg down, if that low holds, and we don't know that yet. But if the low holds, we could have a decent rally before this decline resumes. We're looking for the pattern with the early low, but this is a sign of rejection of the lows if it's maintained. And there's a good chance of this low holding, and if not, then the idea fails. But if it holds, we could just enter the big ABC down with an up move before we see much lower prices. And that is today's call.